Earned income. The most common way people begin building wealth is through earned income. This includes salaries, wages, and professional work where individuals exchange time and skills for money. Careers in fields like medicine, law, engineering, or finance can provide stable and sometimes high income over time. However, this path has limits since income is directly tied to time and effort. To grow beyond that ceiling, many people improve their skills, seek promotions, or transition into higher-paying roles. For most individuals, earned income serves as the starting point of wealth building, providing the capital and stability needed to pursue other opportunities later on. Business ownership. Business ownership allows individuals to build wealth by creating systems that generate income beyond their own time. Instead of working for money, they build products or services that can scale. A successful business can grow, hire employees, and expand across markets. Entrepreneurs like Elon Musk built wealth through companies such as Tesla and SpaceX. This path offers massive potential because it is not limited by hours worked. However, it also carries significant risk, as many businesses fail before becoming profitable or sustainable over the long term. Investing. Investing allows individuals to grow wealth by putting money into assets that increase in value over time. This includes stocks, funds, and other financial instruments. One of the most important concepts is compounding, where returns generate additional returns, leading to exponential growth over long periods. Investors like Warren Buffett built wealth through disciplined strategies with companies like Berkshire Hathaway. Investing requires patience, consistency, and an understanding of risk. While markets fluctuate in the short term, long-term investing has proven to be one of the most reliable ways to build wealth. Inheritance. Inheritance is a path to wealth that comes from assets passed down through previous generations. This can include money, businesses, property, or investments. It provides a significant advantage by offering access to capital and opportunities without starting from zero. However, inherited wealth still requires careful management to maintain and grow over time. Without proper decision-making, it can decline due to poor investments or economic changes. Many long-term wealthy families focus on preserving assets across generations, ensuring that wealth continues to provide value. Inheritance is not about how wealth is created, but how it is transferred and sustained over time. Leverage. Leverage is the use of borrowed money or external resources to increase potential returns. This includes loans, credit, or investor capital that allows individuals to control larger investments than they could afford alone. When used effectively, leverage can accelerate growth and create opportunities that would otherwise be out of reach. However, it also increases risk, as losses can be magnified just as much as gains. Because of this, leverage requires careful planning, discipline, and risk management. It is a powerful tool that can significantly enhance wealth-building potential, but only when used with a clear understanding of its risks. Innovation. Innovation creates wealth by introducing new ideas, products, or systems that change how people live or work. This often leads to the creation of new industries or the transformation of existing ones. Entrepreneurs like Jeff Bezos built wealth through companies such as Amazon by reshaping global commerce. Innovation allows individuals to create value at a massive scale, reaching millions of people. However, it is also one of the most uncertain paths, as success often requires experimentation, risk, and persistence before achieving meaningful results. Speculation. Speculation involves taking high risks in hopes of achieving high rewards. This includes activities like short-term trading, cryptocurrency investing, or betting on market movements. Unlike long-term investing, speculation focuses on timing and rapid changes in value. While some individuals achieve quick gains, this path is highly unpredictable and often unsustainable. Markets can shift suddenly, leading to significant losses. Because of this, speculation is considered one of the riskiest ways to build wealth. It requires both skill and luck, and consistent success over time is difficult to achieve compared to more stable strategies. Fame. Fame is a modern path to wealth built on attention rather than traditional assets. Actors, musicians, and public figures turn visibility into income through films, music, endorsements, and branding. The more people watch, follow, or engage, the more opportunities are created. For example, Taylor Swift built wealth through music, touring, and ownership of her work, while Dwayne Johnson expanded from acting into global business ventures. In this system, attention becomes currency, and influence can be converted into long-term financial success. Game development. Game development is a path to wealth built through creating digital experiences that can reach millions of players worldwide. Unlike traditional work, a successful game can continue generating income long after its release through sales, updates, and in-game purchases. Developers like Marcus Persson created games such as Minecraft that grew into global platforms. This path combines creativity and technology, allowing developers to turn ideas into scalable products. However, success is unpredictable, and many projects fail before achieving widespread recognition. Gambling. Gambling is a high-risk way people attempt to gain wealth through chance rather than strategy. This includes casinos, sports betting, and lotteries, where outcomes are largely unpredictable. While some individuals experience short-term winnings, the odds are usually designed to favor the system. Unlike investing or business, gambling does not create long-term value, making it difficult to sustain success. For most people, losses outweigh gains over time. Although it can produce occasional large payouts, gambling is generally not a reliable or stable path to building lasting wealth compared to more structured methods.